Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 10th April 2026, and joining Lee to pose some questions on the financial market themes for the week ahead is Seiko Kataoka Fisher, Director from Japanese Customer Sales for EMEA in London. This material is only intended for professional investors in jurisdictions in which its use is permitted under applicable laws, rules, and regulations. It has been produced for information purposes only and should not be construed as investment research or advice. MUFG EMEA disclaimers and disclosures can be located on our website.
Hi, Lee.
Hi, Seiko.
We've seen the US dollar correct sharply lower this week after the US and Iran agreed to a 2-week ceasefire. Do you expect the US dollar to weaken further?
Yeah, I think that's certainly the main development this week has been the ceasefire agreement. And that has triggered, like you say, a sharp reversal in terms of FX market performance. The dollar we've seen has given back most of the gains recorded over the past month since the Middle East conflict started. At the worst point of the conflict, the dollar index had strengthened by just over 3%, but now it's up by just over 1%. So it's been already quite a big reversal lower for the dollar. The main beneficiaries from the ceasefire over the past week have been the more high beta G10 commodity currencies of the Norwegian krona, New Zealand dollar, and Australian dollar, alongside the other Scandi currency of the Swedish krona. All four of those currencies had underperformed since the Middle East conflict began, especially the New Zealand dollar and Swedish krona. So it's no surprise that those are the ones which are bouncing back the most over the past week. Certainly these de-escalating tensions in the Middle East have helped to ease some of the safe haven demand for the dollar, and that leaves it vulnerable to the negative impact from the recent unfavorable move that we've seen in yield spreads, and also potentially as well a further loss of confidence triggered by the heightened US policy uncertainty that we're seeing under President Trump. Looking as well at the Fed's recent policy signals, I think it's fair to say that they are willing at least to look through the energy price shock initially and to leave rates on hold for longer. While if we look at messaging from the ECB, Bank of England here in Europe, more recently, they've been indicating that they're more willing to raise rates in response to these upside inflation risks. So we still expect the ECB to deliver 50 basis points of hikes in the coming quarters as they look to try and dampen the upside inflation risks. And that does then create the potential for policy divergence there between the Fed and European central banks, and that could encourage further dollar weakness. Obviously, we are making the assumption as well that the Middle East conflict will continue to de-escalate and that energy supply through the Strait of Hormuz will gradually resume. Although obviously we do acknowledge that the path is unlikely to be smooth in terms of de-escalation going forward, and there's certainly the risk that we could see further kind of setbacks along the way.
What are the key event risks to watch out for in the week ahead?
Well, at the start of the week, we'll be watching closely to see how the talks have progressed between the US and Iran over the weekend. Obviously, diplomats from both sides are expected to meet in Pakistan this weekend. And that's going to be important given that the current fragile 2-week ceasefire is already showing signs of strain after Israel continued to attack Lebanon. And there also appears to have been little progress from Iran to allow more vessels to pass through the Strait of Hormuz. So if those talks were to disappoint, that could put a dampener on the investor optimism that we've seen over the past week and offer some support for the dollar. Elsewhere here in Europe, we'll also be looking at the fallout from the parliamentary elections that are going to take place in Hungary this weekend. Going into those elections, the opinion polls have been pointing towards a widening lead for the opposition party, which is increasing the likelihood that Prime Minister Orban's Fidesz party will lose power and potentially bring an end to Viktor Orban's 16-year term as Prime Minister in Hungary. If that does materialise, I think that would be certainly welcomed by financial markets next week, as the Fidesz party and Orban is likely to be replaced by the main opposition party, the TISA party, led by Peter Magyar. I think that outcome would likely lead to a significant improvement in relations between Hungary and the EU, and potentially opening the door as well to unfreezing of EU development funds, which would support growth in Hungary. We've already seen the Hungarian forint strengthen in anticipation of this potential political change in Hungary, although obviously there is understandably still caution amongst investors that Prime Minister Orban could attempt to try to hold on to power. So that as well is obviously going to be important in determining to what extent the Hungarian forint strengthens next week.
Thank you very much, Lee.
Thank you.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.